Everyone. This is Brad Matheny. Today is the 11th of February. We're looking like the markets are going to be headed downward. Get rid of that. Get rid of that. S&P is down almost 0.3%. You can see a little bit of a breakdown over here. I mean, if we're going to talk about the day that the breakdown is going to happen, it's probably going to be today, the 11th, the day after my 10th pattern. And the reason being is we have quite a bit of data coming in today in terms of, we have Powell speaking. We have Red Book data coming in 35 minutes. We have Powell testifies at 10 a.m., which is, right after the markets open. And then we have short-term energy outlook. And then we have three-year note auction. And then Bowman speaks. And then Williams speaks. And crude oil inventory. Not a lot of data today, but, Powell testifying, news that the Fed overnight lending is nearing out of money. The government's talking about the Dems are threatening to shut down the government. I mean, we're looking at, and that's by I think it was March 20th or something like that. We're looking at a whole bunch of mess. Tomorrow we have, let's see, 30-year mortgage rates, mortgage applications, OPEC monthly report, core CPI. So this could be a pretty good carryover. And then Powell testifies again. Crude oil inventory. Bostic speaks. Wait, I don't know what that is. And then we have 10-year note auction, federal budget balance. Oh boy, 1400 end of the day tomorrow. So we could be looking at it, and Fed Waller speaks. So we could be looking at a pretty moderate roll down here when you get right down to it. If the markets don't like what Powell says, we're looking at the pattern today as a gap defender in bullish trending. Let me show you what that's going to look like. Here's our gap. You can see it. Okay. This was the gap here on Monday. A gap defender is essentially a method of trying to hold above this gap. In this case, it's a measure of trying to stay up in this area, trying to hold above this gap. If possible, a gap defender can fail, which would be a breakdown below the gap and potentially moving downward. So understand that, we have kind of a, a likelihood that we're going to try to hold above this gap today. I'll draw it in yellow. And if we get a breakdown and close that gap, then we could be moving into a fairly strong downward trend. So pay attention to that 602 roughly 75 area. Okay, 602.75. And I think, like I said, if the breakdown pattern that I'm expecting, the deep V pattern is going to occur, the likelihood of it happening somewhere around the 11th, 12th, 13th is pretty high. I mean, the first day of the pattern was the 9th, which was the weekend, Sunday. Then the second pattern came in on the 10th, which was yesterday. We've got no deep V. We have a deep V back here. But I strongly believe that the pattern, the deep V setup, the breakdown setup is going to continue on into today, tomorrow, maybe even Thursday, depending on how this news sets up and depending on what happens with the markets overall. So, be prepared. We still have, as I told you, these patterns, these breakdown patterns typically have a 2 or 3 day window. So we come back over here, find it real quick. So here's our 10th major bottom, moving into our 21st major bottom, and here's our V bottom on the 9th. These things, this top up here came in on the 18th and 13th and 20th. And we didn't get to that top until the 23rd. fix now. This tab is using mixed resources group formula like okay, fix it. I don't care. Inactive tab. Okay, got it. I'll get rid of that for now. Something's going on with that. So again, we're looking at this breakdown, and the 10th is where the peak bottom pattern set up. That was yesterday. And now, we're looking for that V bottom. I kind of think that we're going to be moving into that V bottom over the next 48 hours. We'll see how this moves. Gold, interestingly enough, is moving into a uh, gap, stall, revert, flush pattern, then a topping pattern, then a gap potential, then another gap, stall, revert. Gold, I'm going to show you here in a minute, has really been on a terror up to 2,900 plus. And it would make sense to me that this is where we could see the breakdown in the SPY causing gold to potentially move downward. So, we get into this topping, gapping potential. I think we could be looking at, as I mentioned to you, kind of a dual stage type of a pattern here, like I've drawn, potentially moving into that 21st, which is really over here. So if we were to look at this coming up, rolling into this pattern, this is kind of what I think we could be looking at. A deep roll, maybe into this 580, 584 area, moving back up to the 590, 593 area, rolling back down here to the 580, 575 area on the 21st, 22nd, which is a Friday, and then trying to pull out of it. So we've got to, if we do get a breakdown, I'm still targeting this 580. In fact, I'll draw this to show you I'm still targeting this kind of a lower range right here. I really believe that's our target. So we will see how it plays out. Obviously, I could be wrong, but we'll see. Like I said, I'm not calling it wrong yet. These patterns typically have a 2, 3, sometimes maybe 4-day window, but we've got a deep low potential bottom setting up here, and then a second deep low potential bottom setting up around the 21st to the 24th. So remember, that area here would be kind of in this area, going all the way out to about the 24th, 25th, potentially. 2 or 3 days either way around the date that's been predicted. So, that gives us about a 4 or 5 day window. But, this peak up here, when I called it, happened on, I predicted it would happen back over here on the 20th, up over here. Sorry, but it actually happened on the 23rd. So this was predicted to happen on the 21st, I think it was, but it happened on the 23rd, 2 days later. So this could happen a couple of days later, which would be today or tomorrow. Okay, so come over here to QQQ. And you must understand that we continue to get these lower lows. We continue to get this breakdown. We've broken down outside of this flagging formation, the blue flagging formation. I mean, you could argue that we've come back up into it here, but we've already had this breakdown. So, I mean, in reality, we could redraw that to like this. Oops. Like this, all the way up, come back down, and then come across these lows, which may be a more defined channel. Okay. We would have to get up above these levels on a confirmed close. We rejected right up here. So pay attention to the fact that we rejected right here on the QQQ to the downside. And now we're trying to watch how this is going to play out. The Qs are already down 0.6%, a little over 0.5%. Going to be opening down in this 526 area. Remember, we're looking at the gap defender. We're already kind of in the middle of the gap here. You can see right in this area. Would strongly think that we're going to be breaking down into this 518, 520 area over the next 24 to 48 hours, especially with Powell's testimony. So again, pay attention to the fact that we could be losing a lot of momentum. And, when you come over here and you look at this, we get the gap defender and we get a little bit of a base rally. Then we get a Harami inside and then the crush pattern on the 14th, which in my opinion is going to be this crush pattern could be a big down day. And then so we're going to have to see how this plays out. Okay, gold and silver. I mentioned gold has been on a tear. You can see it here. This is hourly. Let me come back to 2 hour. Silver has gone nowhere, except it's headed down now. Now, what would I warn you about gold and silver moving down like this? I would tell you that when gold and silver move down like this, the markets are going into a panic. Okay, so I would suggest right now that we had a lot of hedging yesterday in gold, and now this type of a breakdown from 2670, 2665, 29, sorry, 65 down to 2900 and moving downward would suggest that this is going to be our breakdown day. Okay. I think we're going to move back into this 2860, maybe 2840 area. And silver, believe it or not, could actually roll, kind of drew it here, but could roll down into this 31, 3120 area as the markets get into that deep V correction. So pay attention that gold could move down into the 2820, 2840 area on a panic trend. And that's what looks like is setting up here on this big pullback. I mean, it's not huge yet, but it's big enough. You figure we're up here at 29.65. We're down here at 29.08. That's a $60 move. That's going to be pretty big. That's going to be about a 2% move. And we're maybe coming down here into this 5% area, 28.20. And I think this is a pretty good early panic selling. If this accelerates, and you got to watch metals, if this accelerates to the downside, then we're looking at a pretty big breakdown. We're probably going to see $31 silver, and you're probably going to see 2800, 2820, 2830 above this gap here. I'll highlight this gap. So there's the gap that we would be defending, and this $31 area in silver is really long term support. So we would be looking at this area here, this 2794 to 2820 area for support for gold. And we'd be looking at this $31 area as support for silver. But again, this looks like a good solid breakdown is taking place. Metals don't move down like this very often unless there's some real concern, especially after making a big move like this. This is now look like panic is starting to set up. We'll see if this continues, but this looks like a pretty good solid breakdown. New lower lows, new lower highs here in silver, gold peaking out up here. It makes sense to me that we're going to come down into this 2850, 2860, maybe down into retest this zone. So maybe to retest this zone as support just above the gap, the upper gap area. So again, gold and silver move into a gap defender. Sorry, that's the SPY. You get into a gap stall revert. Okay, flush, then a topping pattern, then a gap potential, then a gap stall revert flush. Now, a gap stall revert flush is a very complicated kind of a pattern. It can be one of four things. And what we're looking at in this case is a reversion. There's no gap, there is a stall, and there is a reversion. The reversion would likely come back to these earlier areas. So, somewhere down in this area, which means that I would probably suggest that you would be looking at gold moving down into kind of this stalling zone. kind of that area. That's 2640, 2650. It makes sense that with these rejections and this rejection, that this would be the next target, moving back into that stalling zone. Secondarily, I could argue that maybe we're going to run into some support right in this area. So it gives you an example of where gold may attempt to move to. But this looks like a pretty deep kind of a selling phase, which again indicates panic. So 2880, 2885, 88, maybe 2840, 2845. These would be the areas I'd be looking for this week with gold pulling back down before making another attempt. Now remember, we eventually are going to run into that secondary panic channel right over here. So there's going to be another potential breakdown setting up in gold around February 20th through 24th. So, in theory, what would happen with gold, as I've tried to draw here, is we could get this breakdown like this. Let me draw it again. We could get this breakdown down into this area, consolidate, roll higher, break down even deeper, consolidate, try to move up. Then eventually we get another breakdown around March 21st, 22nd, 23rd. So, be prepared for some really wild trading here if this continues to break down. Okay, really, it's gonna get crazy. And remember, I tried to warn you about it. So look, SP's now down 0.5%. QQQ, oh, that's the Qs. S&P is down 33, 602. So we continue to break downward. Bitcoin is up 17 bucks, starting to break down as well. Let's go back over here to 2 hour. Yeah, it looks like the markets are finally starting to coalesce and align with my patterns, which is kind of great to see when you think about the fact that I called it 35 days ago. So, we're getting that breakdown, we're getting that weakening. We're consolidating downward. You can see here we set this high back in December 17th, 2024, set this low actually back over here on December 5th, 2024. We've reconfirmed these lows repetitively. We've reconfirmed this top repetitively. In fact, I'll draw one of these so you can have some reference as being a top. And move this to the top, visual order. And we've continued to see this breakdown. So now we're seeing this big breakdown, across this high, down to this high, down to this high, down to this high. And I really think we're moving down into this low. Okay. The next phase that they kept telling you off of this pattern would be a breakdown below this level to try to set up some sort of consolidation. So you remember I talked to you guys about how, ideally from this level here, and I'll draw it in magenta so you can see it. Really the move here would be to break down, maybe run into some consolidation, and then try to break down into this area and consolidate here before attempting to move down to an ultimate low. So it looks like we are getting into that final stage consolidation rollover, and we will see. I mean, at this point, we will see what ends up happening. In order for us to reject at this level, we have to see a very solid rally, which again, not sure that's going to happen. We'd have to get up above this 109, 300, 109, 250 area, which is this previous high back over here. And in order to confirm to the downside, we'd have to break down below the 92,300 level, which would then move us down into this lower level, 83,000, 84,000, into consolidation. And like I said, we have that same deep V pattern, which is now looking more like the Wednesday, Tuesday, Wednesday timeline. Oh, kind of in this area, and kind of in this area. And I think what you're going to be looking at here, guys, is a, pretty solid move down if my analysis is correct. Now, it might be that we roll back down here, stall, and then roll back down here by the 23rd, 24th, trying to set up the consolidation pattern like this and then roll downward. So that could be an alternate that we don't just break straight downward into this area. This weakening might be a stall and then slowly migrating down into that February 21st, 22nd, 23rd, 24th area right here, setting up a secondary bottom kind of right over in this area. That's where the next low should be. Okay. Okay, guys, trying to keep these a little shorter. Really appreciate all the feedback. Again, thank you, TradingView. Love that I'm getting a lot of comments, some good, some bad. But like I said, we'll see. We've got basically, 48 hours. I would say that by this Thursday, Friday, if we don't see, here's my breakdown right here. If we don't see that big breakdown by Friday, then we get another big breakdown over here on the 21st, 24th, 25th. Now, understand this is rally mode and counter trend. One of them is a counter trend right here. But we get this crush pattern and trending mode, which I think is going to be a downward bar. Then a top setup, gap potential, gap reversal, rotation, and top resistance and counter trend. I think this whole week is kind of like the end of this week and most of next week is a big breakdown. And then eventually we roll into basing, bottoming back over here late this week, 24th, 25th, 26th, maybe, maybe. We'll see. But at this point, I'm looking for the SPY, which is weakening. I'm looking for the SPY to basically move down to this 584, call it 585 to 589 area at this point. Eventually, maybe getting down into this 580 area, maybe a bit lower. So this is the breakdown I'm looking for. It's been that. I mean, I've been calling 584 for weeks, but this is the area I think the markets are really going to be getting down to. We'll see if it happens today or tomorrow. I mean, it's getting into that do or die time. If we're going to get a breakdown, it's going to happen. Okay, guys, I'm going for coffee. I'll talk to you later. Go get some today.